So now, since we've seen how to record trade receivable, that is business receivables, then the next one is to treat our payable, Xerox payable. Now let me cancel this first, and let's see the illustration. Now the question said that while 1000 of OPC materials and 500 kg of WPC material were purchased from Yoscoop and Santos. Now, before we go back to our QuickBook, what is payable? Business payable, also known as accounts payable, refers to the amount a business owes to its supplier, vendors, or creditors for goods or services purchased on credit. There are three types of payable. Supplier's invoice is there, vendor bill is there, credit card balance is there. Effective management of payable is crucial for maintaining good relationship with your supplier, avoid late payment fee and penalty, and also managing cash flow. Now, when we look at this illustration now, we all know that Yoscoop and Santos, they are our vendors. They are the suppliers of raw materials. So now, as at the date of reporting, which is 31st/12/2024, Xerox is owing these suppliers. So because Xerox bought 1000 kg of OPC material and 500 kg of WPC material, Yoscoop sold OPC material while Santos sold WPC material. So now let's go back to our QuickBook accounting. Now I'll open that. Then now we have to come back to this received inventory, and then I'll select this receive inventory with bills, and we have receive inventory without bills. Let me explain what receive inventory with bill stands for and what received inventory without bill stands for. Now, when we received inventory with bills, it means that we purchased an inventory from our suppliers without making any payment in respect of what we purchased. So immediately a bill will be sent to Xerox that you purchased so amount of inventories without making any payment, and due date will be stated on it. But if we received inventory without bill, it means that as we are receiving that inventory, then we made the payment to settle what we purchased. So now, but remember that we are dealing with trade payable as at 31st of December 2024. So it means that we received the inventory with bill. Then I'll click this received inventory with. Now when we look at this interface, we have two different sections here. This one is for expenses, while this one is for inventory. You know, your payables can be on expenses. Maybe we do subscription on credit. It's an expenses, not material. Maybe we take transport on credit. It's an expenses, not material. So now, if we are incurred an expenses on credit, then definitely we are coming to this expenses NGN. But what we have in that illustration is that we bought inventory on credit, so we are coming to items. So I'll click on a item. Then as at the date is 12/31/2024. Okay, it's okay. Then I'll select the first vendor, which is Yoscoop. We bought 1000 OPC from Yoscoop. So item, let me select that item. Item is a OPC material from Yoscoop. So enter. Now let's confirm that this is OPC material 1000 kg. So then I'll put kg to be 1000. Okay, then that is what we bought from Yoscoop. It means that Yoscoop now we are owing 1.2 million naira. We are owing him 1.2 million naira. Then I'll save and new. Okay, then the second vendor again is Santos. Santos sold 500 kg of WPC. So then we're coming back to that. I'll select the items that we bought WPC material from Santos on credit, which is 500 kg. So we have 500 kg. Now, how much is that? That is 1,250,000. Then I'm going to save and close that. Immediately, I'll go back to our balance sheet to see the effects, and also on the trial balance to see the effect. Now, let's go to our balance sheet. Now, when you look at the balance sheet here, under our liabilities, look at this now. We have accounts payable, and let me click that. Accounts payable. How do we arrive at this? So now you can see that total accounts payable is 2,450,000 naira. Is that clear now? That is what we are owing now. Then let's go back to our trial balance. The trial balance now, you will see there that we have trade creditor, which is a liability, and then we have to say that on our credit side. Look at this now. Here is it. Accounts payable is 2,450,000 naira. That is it. So now, this is how to input our opening balance for receivable and opening balance for payable. But before we do that, we have inventory valuation. Is that not? What is now the effect of opening balance on that receivable and our finished products? Let me kindly explain this. Now, when we were doing stock valuation as at the end of December 2024, we have receivable. Is that not? We have receivable. So now we've already counted the numbers of goods in the hands of our debtor to this value, to this value, to these 2,000 bags of cement gum. So now, when we now imputed our what? Debtors, and then when we look at the question says that 50 bags of cement gum were sold to Bill Calf, and immediately QuickBooks will remove 50 from these 2,000 bags of cement. So now it means that 50 is now outside, while 1,950 is in the store. The same thing applicable to that of waterproofing. The total waterproofing is 1,007, including the one that we sold to Bill Calf debtor, and then immediately that we inputted Bill Calf as our debtor, QuickBooks automatically deducts 35 bags out of that waterproofing. So that 35 bags now is now the receivables, and then the remaining balance now is 1,665. That is the actual bags that we have in our store, while 35 is in the hand of Bill Calf, which means that is either we will be expecting cash in return, or Bill Calf can return that goods back to us. So that is what happened there. That is why we can see that we have 1,950 and 1,665. Now let me click this one so that we can see what we're saying. Now look at this now. 2,000 was recorded. How would it now? 2,000 was recorded. But when you now check this now, we now deducted 50. That is, the QuickBooks deducted 50. So it means that what we have in the stock presently now is 1,950, while 50 bags is in the hand of our debtors, which is Bill Calf. The same thing applicable to that of a cement gum. So here is it. The cement gum, we recorded 1,007, but 35 is in the hand of our debtor, while 1,665 is in the store. So now it's either Bilcap made the payment in respect of these 35, or Bilcap will return that 35 bags to the factory. So that is how QuickBook treats that case. And then that of materials as well. I would now the materials that we bought on credit. Let's see that we have OPC material 51,000 and the WPC material which is 25,500. Let's click that. 25,500. Now, before on our record we have 50,000, but we bought 1,000 on credit as at that day. So now automatically QuickBook added it to that 50,000, which means that what we have in store now is 51,000 kg. Then the same thing is applicable to that of a WPC material. WPC material. So now, which is a 25,000 kg, but we bought 500 kg on credit. Are we there now? So which is a 25,500. So now this is how to treat your trade payable. Now let's see the next item on our list.